Rob, we had the US pulling back last night, and that was despite strong results, especially from Catapiller. Why the pullback, do you think?
I think still the fundamentals are not 100% strong there. The PPI inflation was very weak, and the housing data was also very weak. So on the fundamental level, not quite where they want to be, and I think people are starting to take profit. Even though there are very good earnings, people are taking some money off the table.
And of course, we do know that the housing market is a key focus for the markets, because it's really in the housing market that the whole financial crisis started, isn't it?
Yes, definitely, and obviously the housing market is bottoming, but it's still in contraction, and it's not. It hasn't started moving forward yet, so it's contracting at a slower basis, but still very worrying for the US economy. As well as they've had a tax break for new home buyers of $8,000, and that comes to an end at the end of November. So it's also substantially pushed those new housing starts up, and that could slow down again, and that's what the market is worried about.
Are you surprised that those tax breaks didn't have a more positive impact on the housing data?
Well, definitely slowed the contraction, so that's some positive, but obviously still $8,000 is quite a big input and a bit of a help. However, you know, to the banks actually lend, the banks are still not lending as much as they did before. So only until that lending starts to open up 100% again will it have its full impact.
Well, just taking a look at some of those US earnings, we know that Catapiller outperformed expectations, and by quite a wide margin as well. And yet some of the other companies, although they might have beaten the profit line, they disappointed on the revenue line, didn't they?
Yes, they did. At Coca-Cola, their sales were weaker than expected, which was quite surprising, and DuPont as well were weaker than expected. So you have to watch each company very closely, and it's not just broad-based increases across the line. And I think one or two negative results, like Coca-Cola's results, put a dampener on the market, and you could see people taking money off the table straight away.
I mean, would you describe the pullback that we saw yesterday as perhaps just a bit of healthy consolidation?
Yes, definitely. The market is consolidating. We saw the market open relatively strong this morning, and then selling came in and consolidating at these levels. I don't think there's a huge amounts of short selling coming into the market, but the market does seem to be taking a breather.
But we really also need to see that economic data coming in to start backing up the company earnings and the share prices that we're seeing, don't we?
Definitely. I mean, obviously, a lot of the earnings coming through is a lot of cost cutting and a little bit of growth coming through. But to make that growth really aggressive and looking forward, very positive, we do need to see some of that underlying economics coming through. And the US consumer is still under a lot of pressure, and locally, obviously, our consumer and manufacturing is still under a lot of pressure.
Well, perhaps just taking a look at some of the local company reports that are coming through. We had BHP Billiton out with the third quarter production report this morning. It showed that its iron ore was up slightly, but it does have some problems with its Olympic Dam project in southern Australia.
Yes, Olympic Dam, a very big dam. I think it's a fourth, very big mine, the fourth biggest copper mine in the world. They're only going to be back at full production in March, and they're only running at 25% production at the moment. It's also pushed the copper price up to new highs, which are around the $6,000 level. And they're having a lot of problems at that mine, as well as on the iron ore side. The iron ore production only moved up 1%. And we take a look at Billiton's earnings, 30% comes from iron ore and 25% from base metals. So looking forward, they really need to increase production, so not the best numbers from Billiton there.
How about Pick n Pay? It came out with its half-year results, really in line with the trading update that it put out recently. And an initial positive reaction to that from the Pick n Pay share price. What's the view of the market?
Very good set of results. I think all the food retailers are showing their strength and defensiveness in a difficult period in the market. They look relatively cash flush as well, and going forward look very strong. Obviously, Raymond Ackerman is now retiring at 80 years old, and obviously that's a little bit of a dampener. But I think 43 years of tenure and obviously one of the best businessmen in South Africa.
Well, we have the Reserve Bank's Monetary Policy Committee kicking off this morning, winding up tomorrow. What's the expectation? I know that most analysts are expecting the repo to be held steady.
Nedbank also thinks the repo rate will be held steady. There's one or two inflationary inputs that will cause a problem if they come to fruition. The one is the oil price, along with the weakening rand. The rand has increased, petrol prices increased 76% since the beginning of the year, but in rand terms it's only increased 37%. So the rand has really been helping in the inflationary levels and on those inputs. And if the rand does start to weaken, there'll be a lot of inflation coming from that oil price. And I think because of that, along with the Eskom's electricity pricing, interest rates probably will be kept as they are.
Of course, we know that at the same time we do have quite weak retail data that came out about a week or two ago, and the manufacturing sector also remains weak. So it really will be quite a tough balancing act for Tito Mboweni's last MPC as the governor.
Yes, definitely. Obviously, the manufacturing need a much weaker rand, and obviously, if that we increase, if we cut the interest rates, the rand will weaken. And obviously, from the manufacturing side and also from an employment side, people would really like that cut. But I think the inflationary pressures and to keep us in that target of 3 to 6%, we'll still remain unchanged tomorrow.